Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of LME 3-month copper and aluminium. I'll start with LME 3-month copper. A third bearish black crow on Friday and a comprehensive attempt to punch through and close below trio of supports from 2011. They are the March high at 99.99, the April high at 99.47 and the July high at 99.07. The recent questions the market has been asking itself seem to be resolving, but only barely. The move lower ended up closing below all three supports, but only just. The tail of the move lower explored down just through the mild congestion in the 98.56 area before turning back up again. Below congestion support, we don't seemingly have any significant actual support until the February high at 96.17. So far today, opening around the same as Friday's close, then a quite severe drop through the mild congestion all the way down to the round number at 9800 before a pullback up to seemingly be happy, forming an indecisive doji cross, but with a long tail and maybe aspirations to be a bullish doji cross. LME 3-month aluminium. The long-legged, indecisive spinning top on Friday. Some might say it was also a bullish harami, but I think that is a little far-fetched to be true. This is the first halt in a move lower that started at the beginning of last week. There was also a second consecutive close below both the upper tine and the lower LME 3-month aluminium. A long-legged indecisive spinning top on Friday. Some might say it was also a bullish harami, but I think that's a little far-fetched to be true. This was the first halt in a move lower started at the beginning of last week. There was also a second consecutive close below both the upper, currently 24.04, and the lower, currently 23.91, trend lines of the old ascending triangle pattern that started the recent move higher in the first place. That's back between February to late April. Now, the market punched down through both the big old 50% Fibonacci line of 2008-2009 move at 23.30 and the nearby rising short medium moving average, currently at 23.27. All this had raised the question in my mind as to whether the recent action since February might be a possible bearish bump and run reversal top. I was open to this idea, but the consecutive closes below the March uptrend, also known as the lower trend line of the previously mentioned old ascending triangle, was too bearish a response. All this comes in the shadow of last week's outside week pattern. Now, so far today, an immediate follow-on lower down through the big old 50% Fibonacci line and nearby short medium moving average before halting just ahead of the significant combined support of the middle time from the shallowly bullish 2011-2015 bullish shift pitchfork, currently at 2300, the March high at 23.01 and the lower bull channel line, currently at 22.92 of the February to April bull channel move. The market has since reverted back up just over the 50% Fibonacci line and the short medium moving average. Thank you for listening. This short version broadcast gives central market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.